Central banks clearly have signaled that there's no limit to what they want to do, but there is a limit to what they can achieve. And monetary policy has run its course, in my view. We've seen massive stimulus over the last few years, and the additional effects of additional easing by the central banks, first and foremost the ECB, are relatively small. They're starting to push on a string.
So when he says, when the president says today, do whatever it takes, there is no limit, to what is he referring? Because yes, he can increase the amount to 95 billion a month, he can add another year or two on, he can even lower rates further to go negative. But you're saying that will only be of limited effect.
Well, the additional effects of additional policies are not going to be very large. And really, central bank balance sheet, when they augment, what central banks try and achieve is basically bring inflation back up. At the moment, this is very hard for central banks. They tried to reinvigorate growth, it didn't happen. So central banks are finding the limits of what they're able to achieve without additional policies stepping in and supporting them.
So what needs to happen in Europe?
What needs to happen is we've seen fiscal stimulus. Fiscal policy is largely neutral by now. Monetary policy is still very expansionary, but we need reforms around Europe. The bigger questions around Europe are around migration, they are around refugees, they are around the structure of Europe. The British Prime Minister spoke here today. It's these long-term structural questions that are really important for Europe.
They say, Axel, they say that they're dealing with these issues. And you have the beginnings of a wry smile. Well, as I say that.
I've been hearing that for 6 or 7 years, and yes, they have started to do some reforms, but we've not seen enough of it. The same's true in Japan. We've heard about Abenomics, we heard about the third arrow, but it's only the third arrow. What they need to do is a lot more on the reform side, because Europe faces structural problems. And cyclical policies, even if you do them forever, do not substitute for structural policies.
And with this then, you saw the effect. Draghi spoke, the market rallied. But at best, that will be short-term, and at worst, it's a sugar rush.
Look, I compare markets to the immediate response to news, and that's what they do. The real thing is, does it move the economy? If it moves markets, it doesn't mean it moves the economy. And I think central banks have become too focused on moving markets because these policies have really tried to push investors into risky assets, but it don't achieve a traction with the economy. They've not achieved attraction with inflation, which is not permanent.
But they can't. That's the problem. They can't. Well, they've tried everything at them, and they can't.
Well, look, but the problem is if you continue to repeat the same policies and they don't work, maybe more of it is not the answer, but a different policy choice.
Join me at the worry wall over here, if you'd be as kind. Choose your colour ink, black, red, blue, or green.
I'll take black.
All right, this is you're very worried about what's gut feeling for 2016. This is you're not worried at all. The year started badly. Where are you on the worry wall?
Well, I'm about here.
You're optimistic.
I'm optimistic, yes.
What's driving that optimism?
The optimism is driven by a very simple fact. We've been to a bad start. There are some things that worry investors, but the real economies are going to pull through. China, authorities will ultimately step in and put things right. Oil, at some point, it's going to bottom out and start increasing. So what worries market doesn't worry me. What worries me is politics and no structural reforms. And I hope that the deep crisis we've been in will now start, in Europe in particular, that we see these reforms.